Welkom by Podlitiek. And in a bombshell, my name is Daniel Ilof, and today we are starting this episode not in our traditional mother tongue language, but we are very privileged to have Ricky Allardyce from BitVice with Paul and I in our virtual studio today, and we're going to talk about BitVice, Bitcoin, self-custodianship, and everything in between in this wonderful special episode with our good guests and sponsors and friends. So Ricky, welcome to Podlitiek. It's lovely to have you on for the first time.
Gentlemen, good afternoon. Thank you very much for having me. I'm very excited to be here. En ons kan so 'n bietjie Afrikaans praat as julle wil. Ek moet ook wel oefen, so yeah. But like I said earlier, the technical concepts about Bitcoin I'm going to struggle to translate.
Well, we'll get Paul to translate all the blokketangs and the eienaarskap and all those lovely words. But in any case, perhaps, Ricky, I think a good place for us to start, not only for Paul and I, but also for all our listeners and viewers, is tell us a bit more about BitVice. Where did you guys start? Why did you guys start? And then perhaps we can jump to where we are at today.
Sure. Thanks, Daniel. Yeah, so my partner Brandon and I, we used to work together, and excuse me, we both avid Bitcoiners, and we were brainstorming one day at work, and we're like, look, we both want to work in the Bitcoin industry. We were working in fintech at the time. Both of us come from a background in finance, and we're brainstorming this idea about where's there a gap in the market, and both of us kind of saw there's no one in South Africa that's providing self-custody only Bitcoin sales, basically, in South Africa. So the issue you have is if you buy Bitcoin currently, it goes to a centralized custodian. So you have to buy it from an exchange, like, the big exchanges in South Africa. I don't want to name names, but they hold your Bitcoin for you until you withdraw it yourself. So it's a two-step process. You've got to buy it, you keep it on the exchange, and then you withdraw it. Now, the reason why it is like that is, it's a lot easier for them because to onboard a customer is easy. You don't have to help them get set up with a self-custody wallet and all the complexities that come with that. But also, they make their money out of fees and out of trading. So if your money is sitting on an exchange, you're incentivized to trade. And that's why you see all these exchanges always listing new coins and have like a lot of altcoins on there. And our take on this is very different. Both Brandon and I are what we call Bitcoin maximalists. We see altcoins as being mainly a distraction and, at worst a scam and at best a distraction. And we take a long-term view on how you should hold Bitcoin. And, you should hold this at least for 5 years if you really want to see the appreciation and upside that Bitcoin has given over the last 12, is really just to hold it for the long term. So holding it for yourself, holding it for the long term, we don't think people should be trading. 99% of people who trade get wrecked. They lose money because professional traders out there will just take the shirt off your back. So that's what we initially came to the idea of building a platform that allows for that. And then we had another idea, which was that the majority of people who are yet to get into Bitcoin are not in Bitcoin yet. I mean, in South Africa, we estimate about 5% of South Africans have Bitcoin. While most people who are in the middle class and upper class who have some money have access to equities and they've got a retirement annuity and they've got structured financial products. And the reason why they have those is because there's a distribution network. There's financial advisors who are selling these products to them. So the real problem we're solving here with BitVice is that we've built a platform for financial advisors to be able to get Bitcoin into the hands of their clients in a self-custodial way. So the advisor will set his clients up with their own wallets. They can hold their Bitcoin over the long term and then, add Bitcoin to their portfolio in that manner. However, we jumped the gun a bit. We're a bit early because Bitcoin is not yet a regulated financial product in South Africa and financial advisors can't sell it. So we are sitting in this position where we've got a product that's ready for financial advisors and, we see the regulation coming. I mean, the Reserve Bank's talking about it, the regulators talking about it. So we know it's coming. It's just a matter of time. So we're ready for that when it takes off. We've got a product that's ready for financial advisors to offer Bitcoin to their clients. But for now, we offer direct to retail and self-custody is our primary focus. And then also helping institutions and trusts and businesses put Bitcoin on their balance sheet and hold Bitcoin in a self-custodial way. So anything to do with you holding your Bitcoin yourself, that's our game, and that's what we do, and that's how we differentiate ourselves from the competition.
So perhaps if we can take a few steps back, I think something that's very important to me, and I think I'm learning more about it as I'm going along. Why would you say it is important for the person out there to sort of protect their money, especially their rands, against the government and against large financial institutions, because this is one of the themes typically when someone's really into crypto, and especially into Bitcoin, like you said, obviously being the dominant coin. The more you get into the chats, people will say things like, yeah, sure, but you need to protect your money against inflation or against the government or against leveraging or gearing or whatever, or the fiscal easing that they just call printing money or whatever. But now, and then you hear people saying, well, Bitcoin is the instrument for that. But many people don't necessarily understand how to make that link and why the one is important for the other and what role Bitcoin can play in that. So maybe if you can just explain that, and I'm pretending that I know something about it, but I really don't. So it's a lesson for me as well as for a lot of people out there, I think.
Yeah, I mean, the question you're asking now is the crux of the matter. Like, this is why Bitcoin is important. And the reason for why we have Bitcoin is it was born out of the 2008 financial crisis. The white paper was published in 2009. A few months later, the first Bitcoins were mined, and the network started growing. And the reason why Satoshi Nakamoto, him, her, they, whoever they were, published this paper was to create an alternative to central banking. So what most people don't know is that there's a monoculture of thought across all nation states in the world for how our monetary systems are run. So in other words, every country in the world, well, not every country, 90% of countries in the world have their own central bank, and those that don't have their own central bank outsource that to another country. So El Salvador uses the US dollar, for example. They don't have their own currency anymore, and now they've adopted Bitcoin as legal tender. But most countries have central banks, and they all follow the same school of thought, which is Keynesian economics. So there's, like in agriculture, this might resonate with some people. If you have a monoculture, if you're planting just a single crop, if that crop is infected by a disease, you'll lose your entire crop because it's all the same genetics present in every single species, because they're all clones of each other, basically, not species, every single plant, because they're basically clones of each other. And this is the same with central banking. So if one central bank happens to fail because the underlying ideas that they have and their fundamental kind of concepts of how they run central banking are flawed, and they fail because of that, all of them fail, which means you have massive systemic risk in that system there. So Bitcoin is the only working viable alternative to central banking right now in the world. That is credible, and that can actually work as a global global money. And that's really what Bitcoin is trying to be, is a global money. And people might misunderstand what money is. Money is not necessarily a medium of exchange or a unit of account. It gets there over time, but primarily what money has to be is it's got to be a bearer instrument. In other words, it's with final settlement. So if I give a piece of gold to you, you now have full custodianship of that piece of gold, and that's final settlement. There's no more counterparty risk. You don't rely on anyone to make good on that in order for that gold to have value. As opposed to a 10 Rand note, you're relying on the government, the intermediary or the third party, to make sure that that 10 Rand still has value, because there's no credit risk, or they don't default on their outstanding obligations, or they don't debase the money by printing. So Bitcoin is the same as gold in that sense, is that there's no middleman or third party that you have to trust to make good on that. So in a nutshell, what Bitcoin is insurance against the global financial system going bust.
Ricky, now, if I may toss a double-barreled question in your way, you mentioned earlier that you're sort of a crypto fundamentalist, not a Bitcoin fundamentalist. So the first question is, why Bitcoin specifically? And then the second question, this is something that we touched on actually quite coincidentally on a previous episode, where one of our listeners said, well, just look at what happened to Bitcoin during the past couple of months. This was about, I think, a week or so ago, when we did see the price of Bitcoin plummet quite a bit. So those two questions, why Bitcoin specifically, and when you compare it to other cryptos, and isn't there perhaps, what's the risk of Bitcoin and its stability?
Okay. Yeah. So I didn't always used to be a Bitcoin maximalist. I came to this position over time. Initially, how it normally goes is you get into crypto by finding out about Bitcoin, especially in the early days when I first got in. There weren't a lot of altcoins around, but they were there. Ethereum existed, Ripple existed, there were Litecoin existed, there were a few others, but like less than 100, And I was like, wow, this is really interesting. And at that point in time, they were all competing with each other, and there was fair competition between them as to see who is going to be the working alternative to central banking here. So these guys all have to compete. These cryptocurrencies all have to compete with each other. But ultimately, what is the competition? It is what can be money, because what are you competing with? You're competing with the rand, the dollar, the yen. Ultimately, you're competing with the US dollar, and you're competing with gold, because you want what is global money, and Bitcoin is trying to be global money. And that's the problem you're trying to solve. Other coins are not doing that. They might say they're trying to do that, but practically they cannot achieve that. And why I say this is that if your coin is not sufficiently decentralized, that if there's a team, a known development team, a known founding team, a VC group that backs it, a company that has established it, that is, as Elon Musk put it the other night, a neck to choke. That is somewhere where pressure can be applied. And if pressure can be applied, pressure will be applied, because the current financial system has vested interest, right? Which means that they don't take kindly to competition. So the stakes are very high here. What Bitcoin is a system that, or it is a system, but a protocol that has no founding team that is known. Satoshi Nakamoto stepped out of it. So there's no cult of personality like there's with Ethereum with Vitalik Buterin. If Vitalik had to die tomorrow, Ethereum price would most likely take a sharp crash. But more than that is the decentralized nature of it. So miners are spread all over the world, nodes are spread all over the world, and developers are spread all over the world, and it's all open source. So if, like China now cracked down on Bitcoin, they said mining is illegal, and effectively 90% of miners left China. Did that kill Bitcoin? No. Bitcoin is just fine. The hash rate has recovered 50% from the drop-off 2 months ago when China started the ban. And Bitcoin itself, the currency, is still used in China because you can't ban it. You can write a law, but that doesn't mean it's banned. Like we have many laws on the books in South Africa that are ignored, like government corruption, for one. So just making a decree does not make it so. So the decentralized nature of Bitcoin is really what makes it the winner in this regard. And it is the second thing that makes it so important is the fact that it has got proof of work backing it. And this is something that people screech about all the time, the energy consumption FUD and all of that surrounding Bitcoin. But that's a feature, not a bug, because what proof of work is digital honesty. You cannot fake proof of work. The only way to prove that you've done the work is by doing the work. So if someone wants to undermine the Bitcoin network and do what's called a 51% attack, they have to spend more energy than what the money they're gonna make out of it. It's gonna cost them more than what they're gonna make out of it. So it's an attack that is not a financial attack. It's it's gonna cost them more money than what they'll stand to gain by doing it. So that the level of security, and when we're talking Bitcoin security, we're talking vast amounts of security here. If you look at how much energy it consumes, it's like on par with the country of Switzerland. So you would have to coordinate a vast amount of resources to undermine the Bitcoin network, and you even have a chance at attacking it. So your money, therefore, is very secure, firstly. And secondly, the rate at which change happens on the base protocol. So a set of rules that surround Bitcoin do not change. And when they do change, they change extremely slowly. Like we've just seen an upgrade now called Taproot, non-contentious upgrade, gives you a few privacy gains, etc. But it's been 4 years in the making to get it to be accepted. It's just been accepted to the network. It's going to be propagated in November. That's taken a very, very long time to get through. And that's not a contentious soft fork. In 2017, there were the block wars where Bitcoin Cash arose and split from Bitcoin. That was a very, very, very contentious story that and it was a civil war within Bitcoin, and it took all of the big VCs who were involved in the space, all of the miners, a massive amount of capital and power was coordinated to attack Bitcoin, to get behind Bitcoin Cash, and they lost because the intolerant minority, we're talking like 5 to 10% of node operators just flat out rejected the changes. And they were like, no, Bitcoin does not change. So Bitcoin didn't change. Bitcoin Cash forked off. Bitcoin Cash is now dying. Bitcoin, it's then forked again to be Bitcoin SV. That's pretty much almost dead. It had a 51% attack on it the other day. But Bitcoin is unchanged. And if you are running your money on something, you want it to be stable and constant and not change. And that is the entire point. This is why it's better than central banking, because you've got a group of humans who decide in a room behind closed doors what interest rates are, what monetary policy is. I mean, the concept of QE was never intended to be what it is today. It was kind of cooked up in 2008, very quickly. I mean, it had been done in Japan and stuff, but they wanted to do it slightly differently in the US, but it wasn't like something that they had years of planning and white papers and scientific studies to do it. They rolled it out and they're kind of, making it up as they go along. That does not happen on Bitcoin. And if you're trying to run a monetary network globally for hundreds of years, like, you need stability. And once you have that, which is tied to that, all that security of mining power and energy that has been spent, it's basically a money that's backed by energy, right? You can then build successive layers on top of it, of contracts, for example. Because one of the most important things about contracts is obviously they reflect property rights. And you can't have a contract that's based on something that's unstable. So Ethereum, for example, they're a smart contract platform. They want to move to proof of stake. Their monetary policy changes all the time. It's subject to human intervention, which ultimately, if you've got a long-term contract, like a title deed for a house, like, you don't want those things changing in the underlying layer. You want it to be stable and ossified, as it were, not to change. And this is why these layers are going to be built on top of Bitcoin, in the layer 3 solutions that are coming. And that's why ultimately Bitcoin beats all of these altcoins, because it's slow and steady and the development happens very slowly on the base layer, but then second and third layers get built on top. And that's where innovation happens and things can be built much more non-cautiously. I don't want to say recklessly, but they're not built as slowly. And that's where you can see all this innovation. And that's where, your fast instant transactions like we have on Lightning are being developed right now. And it's happening, this is in El Salvador. Lightning is how they're accepting payments. And you're having smart contracts built on top of Lightning now as well. And that's where the innovation is going to happen. And that kills all altcoins. Or most of them anyway. So I look, that is why I'm a Bitcoin maximalist, because I look at the rest of this and I say, well, I would rather take one concentrated bet on Bitcoin than a diversified bet into an extremely risky space, which is altcoins. And is 90% of them are scams that we've seen, they exit scam and they run off with your Bitcoin and disappear to Panama. So I would rather not expose myself to that. And I'd definitely not expose my clients to that. And that's why we recommend to everyone, if you're going to take a stab into the cryptocurrency market, just get into Bitcoin, take a long-term position. And over the long term, Bitcoin has outcompeted all altcoins anyway. And then this comes into the second question you asked, which is one of volatility. Bitcoin is volatile enough. Altcoins are far more volatile than Bitcoin, which makes them excessively volatile. So if you're a day trader and your aim is to trade and you know what you're doing, then by all means go and trade altcoins, because that's where you want volatility. That's what trading is about. But if you Davey day trader who's just come in recently, and for some reason people, when they get into crypto, think they need to trade, they get wrecked. I personally look at the opportunity cost of the Bitcoin I spent on trading altcoins. If I just had held it, I would have a lot more money today than what I do. And that keeps me up at night, because every time Bitcoin goes up, my opportunity cost of that trading back in the day goes up as well. So it's the gift that keeps on giving to me, the cost just mounts of how much I've lost in opportunity there. So yeah, the volatility is real. But if you ride it out over the long term, then it's your friend. You can't have massive upside without volatility. That's just how it works. But position size yourself accordingly. Don't put in more than you can afford to lose. And if you put in a position over the long term, in Bitcoin, then everyone who's held Bitcoin for more than 4 years is in the green.
So I've got another question. If I can broaden it slightly, we obviously at Podlitiek, I would say our four main interests are obviously politics first, and I suppose law along with that, because law and politics seem to walk together, and because Daniel likes to speak about law, and then obviously economics and philosophy, because essentially they give politics a bit of color. So, if I could just maybe drift off a little bit, and I'd obviously like to come back to Bitcoin. I want to finish the episode by asking you where you think Bitcoin's going to go eventually, if the $1 million idea is actually realistic. But before we get to that, the view that so let me just explain. Let me give sort of an introduction. We had this idea post 1989, post the fall of the Iron Curtain, that nation states are going to become, let's say, less relevant. That all of a sudden, perhaps you have globalization, you have this idea of distant work, you have the idea that you can maybe sit in Panama and work in New York, or what we're seeing in South Africa, sit in Plettenberg Bay and code for a company in France or whatever. These are real scenarios that we get. And then last year with COVID, we all of a sudden saw, I would almost say, more very liberal academics saying, well, the nation state has become very relevant once more, because all of a sudden people realize that the dissemination of something like a vaccine, or the protection of borders, or the closing of borders, and all of that essentially comes down to the nation state. Now, the idea of how people should be governed, that's an idea that we've been kicking around for the last 6,000 years without necessarily having success. We saw the idea of an empire coming up maybe, say, 3,000-4,000 years ago, and the idea of an empire was very popular. That fell and rose various times with different empires coming up, but you had the Greek Empire being split up, and then you had the Roman Empire sort of picking that up. Then you had the divide of the East and the West, and maybe the idea of maybe the whole Holy Roman Empire, and then all of that was sort of ended, let's say, with the start of the United States and the snowball effect that brought us what we'd now probably call nation state. This nation state, as you pointedly pointed out, tends to regulate finances heavily. As I suppose any governing structure before it would have done, as a king would have done. He would have held the treasury, or as the emperor would have done, or whatever. Now we're sitting in a situation where, for the first time, really, since I would say, probably the first organized governments, we really have the opportunity where a person can sell all their assets and put these assets into Bitcoin. We know that governments don't like this. We know that China are acting out, and we suppose that South Africa, obviously, trying very hard to beat China and praising them in every media, every piece of literature that the ANC is producing in the last 6 months, seem to be praising China in some or other way. So now the idea would be, okay, well, they're gonna try to regulate Bitcoin and try to regulate the way that we spend our money. That is a very long introduction. I would like to ask this. Do you think it would be possible for me to, for instance, walk around in Sandton and be completely disconnected from the South African government, meaning that I walk into a store and I sort of tap, or I transfer, or I pay my Bitcoin into someone else's Bitcoin account, and I take the product, and the government are none the wiser? Or do you think that will be effectively stopped by some other intervention, or that it would become illegal? And maybe ethically, do you think that would be correct? Because I'm essentially, using government infrastructure in some other way. What's your take on that?
Well, the ethical question is an interesting one. I'll start with that. I'm not a tax slave or a tax cow that is here to be milked. I fundamentally disagree with that. I'm a free person. And, I don't owe allegiance to any government or any nationality just because I was born here. Modern governments are the most inefficient structures ever devised by man. If you look at how much tax you pay through your life, it approaches 100%. Somewhere close to it if you include your death taxes. And what do we get for it? The utilization of capital is so grossly inefficient, and it is transferred from those most competent to those least competent. So ethically, I mean, that is completely unethical. It's just blatant theft. South Africa is a prime example if you want to if you want to go down that route. So from a do I owe anything to the government? No, I've paid a large amount of tax in my short working career thus far, and I think that's more than enough to pay for the goods and services I'm probably going to use for the rest of my life. But that's a personal subjective judgment. I mean, some people feel that they want to pay their fair share. That's up to them. The concept of fair share has always been funny to me. It's always something you hear liberal people say, you should pay your fair share. How much of my money do you think you owe? Or do you think you should get? Like it's ridiculous. But anyway, from a practical perspective of being able to use Bitcoin exclusively, I mean, I know a Bitcoiner in South Africa, who's part of our Bitcoin chat group, who has exclusively been on a Bitcoin standard for 5 years himself. And he's got a whole detailed, I mean, he's made it available for people in a blog post to read how to do that. But the easiest way to do it in South Africa is if you earn in Bitcoin, and it's much easier for foreign companies to pay you in Bitcoin than it is for them to pay you in fiat, because it's much faster and much cheaper. But you can go to a Bitcoin ATM and convert Bitcoin into cash. And we still currently have cash. I don't know how long that's going to stick around for, but you can go, and it's a bit inefficient, but convert Bitcoin to cash and then go and spend cash, no problem. Anyway, in South Africa, you'd have to obviously find a Bitcoin ATM. You could also make use of peer-to-peer trading markets, of which there are a few in South Africa, and some of them have got good liquidity. And you can meet up with a random individual who wants to buy Bitcoin from you and convert it into cash. Go to do it that way. Then the probably most practical, not practical, but the convenient way that we would think of digital payments, would require a merchant to accept Bitcoin as payment. And majority of merchants are not going to accept Bitcoin as payment, or Lightning, more specifically Lightning as payment, because that's the payment rail of Bitcoin. They will only accept Lightning as payment when it is completely necessary to do so, and when the volatility of Bitcoin is less than that of the volatility of the Rand. It makes sense. So until then, we'll still use a Rand, because it is, even though it's depreciating and moving downwards, it's stably depreciating, whereas Bitcoin is unstably moving to the upside. So from a merchant perspective, if I just have to accept Bitcoin straight for payments or Lightning straight for payments, I'm putting myself at quite a bit of risk. So until we have what's known as hyper Bitcoinization, where everything is priced in Bitcoin, you're probably not going to see that many people adopting the Bitcoin for payment of goods and services. But you will see it on the margins, where remote workers who are employed internationally will take Bitcoin. They'll convert the majority of it to fiat, for example, to cover their living expenses, then save the rest in Bitcoin. So if you can save 10, 15% of your salary that's in Bitcoin, leave it in Bitcoin, it appreciates. So to the upside of 10 years, you're going to be styling, and convert to fiat the bare minimum that you need. So it is totally possible today to live as a sovereign individual, earning in Bitcoin and, spending in Bitcoin if you work your way around the system. So yes, it can be done.
So, but Ricky, so you mentioned the volatility, and the moment sort of the volatility of Bitcoin is lower than the volatility of the Rand, people will make the switch. Is that something that will, in your opinion, happen in the short term or the medium term, or is that really something that it's sort of up in the air because it's dependent on whether or not people actually accept it, in everyday life?
I mean, I think the biggest determinant of that is the monetary responsibility of governments. If governments were responsible with monetary policy, there would be no need for Bitcoin. It just wouldn't have a use case. So things happen gradually, then suddenly, right? You see slow Bitcoin adoption, and it seems like nothing's moving, and then boom, El Salvador accepts Bitcoin as legal tender. And then you see a hyperinflationary event take root in, pick a country, Argentina. I mean, they have a history of defaulting. Have that happen in Argentina, where you've got a high penetration of technology and smartphones, and next minute people are de facto just using Lightning to trade amongst each other. A prime example of this actually is Nigeria, the highest per capita use of Bitcoin in the world. Over 30% of Nigerians have used Bitcoin. And what happened there was extremely interesting. So Luno, the seventh biggest exchange in the world, the biggest South African exchange, has operations in Nigeria. And the Reserve Bank of Nigeria forced them to cease Bitcoin to Naira conversions and withdrawals of Naira off the exchange. So effectively, they killed the off-ramp. What happened? The interesting thing with Nigeria is there's a vast amount of remittances coming into Nigeria from diaspora all over the world. South Africa, the US, the rest of Africa. There's Nigerians all over the place sending money back home to Nigeria. And they were using Luno as the rails to do that. So they would send Bitcoin back, people would convert it to Naira, and they'd withdraw it to their smartphone, to their bank account. Easy, works. Next minute, the government bans it overnight, instantly, just stops. So what did all those people do? They went to the peer-to-peer market, which cannot be stopped. So all of that volume shifted to the peer-to-peer market, where people just traded amongst each other. So there were market makers willing to buy and sell Bitcoin for Naira on the street individually. And then after 2 weeks, the government realized, oh, we got a problem here, guys. All that tax we were making from Luno for the remittances, because obviously they take VAT and they take their corporate taxes from Luno, that was drying up. So they'd look at that and then they reversed the decision because they didn't want to stifle innovation. Obviously, they wanted the tax, and that volume did not come back to Luno. It stayed on the peer-to-peer market. So they shot themselves in the foot twice because once you've gone to the peer-to-peer market and you've tasted the freedom of not being able to be stopped, and that's what Bitcoin is about. It is censorship resistance. It cannot be stopped. People will find a way, and they can regulate the on-ramps and off-ramps, and they can tinker on the margins, but ultimately, the more draconian your laws become, that society needs Bitcoin even more. So, yeah, Nigeria is a great case study, and we see anywhere that countries clamp down on Bitcoin, it has the Streisand effect, where it just goes the other way. Bitcoin price goes through the roof because there's now a black market for it, and people really need to use it, because if you're imposing currency controls and you effectively reducing the network effect of your local currency, people are naturally going to move to money that has a bigger network effect. And then by default, they will move to the next global money, which is either USD, which is also the on-ramps are regulated. And so the natural thing for people to move to now is Bitcoin.
Ricky, if we can perhaps jump to a couple of viewer questions. I'm going to pop them up on the screen. But the first one is Elon Musk changing his position on Bitcoin? I think that's also quite a funny and contentious question. So perhaps let's start with that one, and we'll get to the second question now.
Yeah, very, very interesting to see the other day, actually. So there was a conference called the B Word, organized by Jack Dorsey and Kathy Wood from ARK, and they got Elon Musk to come and talk. So it was a 9-hour conference. There was a bunch of talks by a lot of other Bitcoiners. And then the final talk was between the three of them with a moderator. And it wasn't actually a debate. It was more just a forum for the three of them to voice their opinions, but there was no interaction between the three of them, actually, which was interesting. So what it seemed like to me was a tee up for Elon Musk to actually tell the world, okay, guys, I am actually pro-Bitcoin. But what was very apparent to me from his comments, it was about an hour and a half discussion, was that Elon Musk might be very clever when it comes to building cars and building rockets and understanding, engineering, but his understanding of Bitcoin is very rudimentary. He just hasn't done the work. So yes, nominally, he is now pro-Bitcoin again, but ultimately what I think people should do is they should not take his opinion seriously on Bitcoin, because he doesn't know what he's talking about. And competence in one sphere does not translate to competence in another. We see this all the time. People see an academic and they think because he knows a lot about one thing, he surely must know a lot about something else. And this is patently not the case. So Elon's influence on the Bitcoin market, I think, is waning. He's not going to have that much influence over it anymore. He was still shilling Dogecoin, which means I don't take his opinion very seriously on the matter.
Right, cool. And then perhaps a last question before I know Paul's quite eager to jump in as well. The question is there an active altcoin ecosystem peer-to-peer in South Africa, such as ADA or XRP, without going to fiat?
Yeah, it's not my field of expertise. Altcoins, I don't play in that space. So unfortunately, John, I couldn't tell you.
Well, John, thank you in any case for participating. We enjoy the comments. Paul, perhaps you can jump in. I know you're eager to get in another question for Ricky.
Yeah, sure. So final question from my side. I think, Daniel, then you can pick it up and lock it down. Like I don't know. If I'm thinking of some other pop and lock metaphor, but that's just going to go horribly wrong. So, all right. So, Ricky, I know that people who are serious about Bitcoin say that it shouldn't be seen as an investment, should be seen as a currency long term. I do think that currently there is some merit in it being an investment because, like you say, it's going to take the upside, and the onboarding process is still happening. I think obviously in South Africa the government's doing us a huge favor by mismanaging everything so horribly. For instance, I mean, working for Solidariteit, it's much easier for me to tell people, listen here, the community should stand together when the government is actively enforcing laws that pushes a community to stand on its own legs, or when the government obviously just doesn't do what it's supposed to do, and that is to effectively manage the monopoly on violence that they're supposed to have, but that luckily they don't really have anymore because they don't really know how to use it. I heard somewhere that there are more private security guards than police officers in South Africa, and I think that's a very good statistic. That being said, I do see Bitcoin as a bit of an investment because currently it just makes sense. You're going to be investing in local ETFs or in local shares, and then you're going to see 4 or 5% a year. Everyone keeps talking about this Signia ETF that saw 68% last year, but I mean that's just not normal, and that obviously was also linked to Bitcoin in a very strong way in any case. But so when taking this view of seeing crypto, or I also have XRP and Ethereum, but and I now know how you feel about that, and what you say makes sense. It gave me a new insight. But when looking at Bitcoin specifically and seeing it as an investment, do you think that's a long-term investment, something that we can speak about for, say, 100 years? Obviously, we have a lot of grandparents who think about their grandchildren, and so you're investing long after you're gone. Is that something that you would think Bitcoin could do, or will we see that after the next halving, or even the one after that, that we start seeing growth figures that are sort of comparable to what you might see in gold or copper or oil or companies?
Yeah, I mean, I can't read the future, but what I can say is that Bitcoin adoption is growing, and more importantly, Bitcoin hash rate is growing. So in other words, the amount of energy people are putting into mining is growing, and Bitcoin hash rate decentralization is growing, which means it's spreading all over the globe. No longer is 50% concentrated in China. It's now being spread all over the world, which is fantastic for Bitcoin, because now governments have to act together and coordinate together to stamp out Bitcoin. So the long-term view, yeah, I have a multi-generational view on Bitcoin. Like ultimately, I want to build a multi-generational wealth for my progeny, so that there's something there for them. And I think Bitcoin is the best vehicle for that, because if I have to think in 50 years, is the Rand still going to have its purchasing power that it has today? Almost certainly, with it, almost 100% certainly, we can say no, it won't. We just don't know how little, even if it will even exist still. But I think the chance of Bitcoin being around there is much higher than the Rand being around because of its decentralized nature. But one important thing I want to touch on is the last couple of weeks, we saw in South Africa just how incompetent the government is at its core mandate, which is providing security for its citizens. We pay tax, so the government will rock up there to defend your life and your property when you need them most. And they didn't. So what makes people think if they can't defend your physical property, they're going to defend your digital property? And by digital property, I mean your ETFs, your pension fund, your bank account. These are all digital assets. Like, they don't have physical manifestations really, from looting. And we might have had looters in the streets in Durban and Joburg looting people's stores, but we've got politicians in parliament looting our digital assets, like our pension funds. Like, they're coming for them. They've lifted the seats on the couch and they've found there's no more coins left there. So they're scraping wherever they can find money, and there's a honeypot of pension funds. So I think it's a matter of time. And I look at marginalized communities in South Africa, minority communities that are actively being discriminated against by the government. And I see Bitcoin as a life raft for them, because you can't have your wealth confiscated if you hold it in Bitcoin. They can regulate the on-ramps, they can make your life difficult, but they can't physically, short of coming to your house with guns and forcing your private keys out of you for every single person, which they don't have the capacity to do. Like, it's a great way to stop the government from robbing you. And particularly for institutions and community groups who are trying to build something in South Africa, because let's face it, not everyone can leave, and not everyone wants to leave, and not everyone, why the hell should we leave? This is our country. If you are trying to build institutions and you're trying to build your own networks, schools, hospitals, universities, you're trying to build all that, and you're building it on the foundation of the rand, you're asking for trouble. Because if the rand gets, you are now slave to South Africa's monetary policy, which eventually, if the ANC carries on, is going to politicize the Reserve Bank, and it's going to have its way with the currency. So maybe I'm wrong, but it might be prudent to take out some insurance. And the only insurance you got on that currently is Bitcoin. So institutions who are building these things should think long and hard about how do we hedge ourselves against the real rand risk and not just inflation, but actual credit default risk. What happens when people just lose faith in South Africa's ability to pay its debts? That's when you have a run on the banks, and you have no one wants to lend you money anymore, and you have a currency crisis. And if you have Bitcoin, you have options.
Ricky, perhaps just before I land this baby, I just want to ask, how can people get in contact with you at BitVice? How do they get started? There is a link at the description of this video where they can click through and they'll get to your website, but perhaps just some more details surrounding that, and then I'll conclude this wonderful discussion. We'll definitely do it again sometime soon.
Yeah, definitely follow the link in the description, because that way it gets attributed to Podlitiek, and we pay Podlitiek some money for any Bitcoin you happen to buy through us. So please do that. And what we do is if you want to purchase, our minimum order is 20 grand. So you can go and do the whole process yourself, end to end, on our website, make the purchase, set up your own wallet. We guide you through the process there. But if you want like a concierge white glove service where we'll set up a specific security situation for you, like let's say you want to buy a large amount and holding it on a mobile wallet is just not feasible, you'd rather have a hardware wallet or a multi-sig wallet, which is a group of hardware wallets chained together, we'll set you up with all of that. So we have a consultation service. We will guide you through the process and make sure your security is in place, and there's succession planning in place, so your kids and wife can get your Bitcoin, or your husband can get Bitcoin if you get struck by lightning or shot by a looter or whatever. So you've got, your Bitcoin is secure and can be passed on through your family. So that's essentially our service. We never hold your Bitcoin for you. It's always held in your own custody. And that way it can't be scammed and it can't be confiscated. And more importantly, if your Bitcoin is left on an exchange, you mentioned earlier about South African government sidling up to China. We know they take their cues from China. Sooner or later, they're going to crack down on Bitcoin. And if your Bitcoin is on an exchange, that is the first place they are going. And they'll freeze that exchange overnight, and your Bitcoin is stuck there. And then all your gains are frozen. So don't take that risk. Always hold your own Bitcoin, not your keys, not your coins. Yeah, hold it yourself.
Awesome. Ricky, thank you so much. It was really wonderful chatting to you today. We really appreciate it. And like I said, we'll do it again. I'm sure we'll get a bunch of more questions. We have questions streaming in on the comments, but unfortunately our time is limited, but we'll get to them in the next episode. So thank you so much for your time. And then, to conclude, the prospects of the rand, this episode 2 has come to an end. If you enjoyed what we were discussing today, please leave a comment, like the video, subscribe to Podlitiek, and please visit BitVice using the link in the description of the podcast or the video wherever you are watching or listening to Podlitiek today. And thank you for all our supporters. Please support Podlitiek by supporting BitVice. And Ricky, thank you so much. We really enjoyed this conversation. We'll chat to you soon.